Hi, I'm Jimmy. In this video, we're looking at Caterpillar stock, ticker symbol CAT. So we're going to run through the basics of Caterpillar's business. Then we're going to jump in and look at some of the numbers. And then we're going to try to come up with a fair value for Caterpillar stock, ultimately trying to decide, is this a stock we should buy now, hold if we already own it, or is it something we should stay away from? Okay, now what you see here is actually from a website we built called investorsgrow.com. It's a stock analysis platform designed to make researching companies easier. You'll see all the charts that we use throughout this whole video. Those charts are from investorsgrow.com. We also do 3 private live streams per week where we analyze different companies, where we talk about building investment portfolios, discuss different overall economic, microeconomic indicators, things along those lines. So if you'd like to get access to that, I will leave a link in the description below. We hope to see you over there. Okay, now jumping back to Caterpillar. So Caterpillar, what their primary business is, they build machines that are used in heavy construction, machines like this, general heavy construction. They also make machines that are used in drilling. They have landfill compactors, mining trucks. They also do a lot as far as oil and gas, marine. They have a diesel electric locomotive division, a part of their business where they sell locomotives, diesel electric locomotives. They make basically all the big trucks you see out there. Those are the 3 primary segments, but then their smaller segment, but is actually playing a key role in the analysis today, is something they call Cat Financial. And I think that because this only represents about 5% of total revenue, I think oftentimes this can be overlooked, but I think it's important that we take a moment to look at what this business does and how it could impact things. So what Cat Financial does is it provides options for our customers and their wholesalers. So the dealers that sell their machines, they offer them options. Kind of like if you're going to buy a car, well, many times you can go through the bank and get a car loan, or maybe Nissan Finance, or maybe BMW has their own financing, or whatever it is. This is a very similar idea. So as far as retail financing goes, generally what they do there is they set up leasing and installment sale contracts. So much like you might do for a car, we make car payments, same type of thing here, except it is Cat Financial that is actually funding the thing. Now, whatever the purchase is. Now, they are using whatever the machine that they're selling to the customer as collateral. But I would just point out that this is a different type of business than what Caterpillar traditionally does. And then they also have the wholesale financing. With the wholesale financing, a lot of times they set up the financing to provide the inventory for the wholesalers, for the dealers, and they also do rental fleet financing. Now, yes, this is something, it's a niche part of Caterpillar's business, but I did find it interesting to learn that they have a 40-year track record with Cat Financial. So it's not something brand new, but it has gotten larger in recent years. So it's just something to pay attention to. Now, they're not the only ones in the industry doing it. You might have a company like Deere. Well, Deere also has financing options, as do many other businesses. Now, as I was researching this, I began to realize that this is essentially what Cat Financial is doing. They're essentially acting like a bank. So I tried to read through their financial statements and try to better understand how do they really deal with them being at least partially like a bank. Now, one of the things that I do think is a good thing is that Cat Financial does go out of their way to manage interest rate risk. Now, interest rate risk is, as interest rates go up or as they go down, any movement in broader interest rate levels, let's say, well, that could make or hurt their money. So let's say they were to loan out short term, something due out in 5 years, they were to make a loan and it's a fixed interest rate. But let's say that they're earning interest on a floating interest rate. Well, if interest rates change in one direction or another, well, they could make or lose money because of that. This is a problem that banks deal with all the time. But I was curious, how would a company like Caterpillar deal with that very same thing? Well, it turns out that they do use interest rate derivatives to help offset it. So in the example that I just gave, where they have a floating rate loan and a fixed rate loan, well, they could buy derivatives, to kind of like options, to offset those so that the interest rate risk can be at least managed a bit better. So as if interest rates do decline in the coming years, well, hopefully Cat Financial won't get too hurt by that. Now, we're going to come back to this in a minute because I think that this is a big deal from their broader business in general. But for now, let's jump in and look over at their revenue. So first thing I think it's important for us to notice on this revenue chart is that this revenue chart's going back about 20 years. And you can see there's a lot of kind of peaks and valleys here. Well, if you look, whenever we're looking at a company, especially a company like Caterpillar, and you see these different valleys and then the peaks that follow it, well, generally what that tells us is that this is a cyclical business. This is a business that moves with the broader economic cycle. So the first pullback there happened in the financial crisis. 2015 or so, there was another pullback where the economy began to slow a bit. Then 2020, COVID happened, another pullback. So companies like this tend to move with the broader economy. So this is what a cyclical business is. So I think it's real important to keep that in the back of our mind that many times buying up at the peak here is probably not the best move. Early indicator, we haven't done our discounted cash flow analysis just yet, but early sign is I'd usually prefer to buy in the valley than buy in the top. Okay, so outside of the hills and valleys, we can see that broadly speaking, the broader trend is in fact moving upwards. So this is a good sign for investors of Caterpillar. Now, another thing to consider when you're looking at any business that sells big ticket items, think airlines, companies like that, Caterpillar. Well, order backlog is basically orders that they've received that they're making the orders that they have in that they're making the products for, and they're going to send them out at some point in the near future. This is based on the dollar value of the orders received. We can see 2020 clearly was a rough year for them, but we're going to forgive them because of, COVID. But recently, the order backlog, broadly speaking, is up. So again, this is a good sign when it comes to future revenue and being able to project future revenue numbers in general. Now, with that being said, let's jump over to net income. Now, net income, just like we saw with revenue, it's going to act in a very cyclical manner, just like revenue did. Now, the tougher part with net income is that you're going to have years, like you did a few years ago, you're going to have quarters where net income perhaps goes negative. That, I think, bigger picture is probably a good opportunity to get into a big name company like a Caterpillar. So I don't know if that would necessarily scare me off at the time, but I do think it's important to point out that there's going to be, if we're considering buying Caterpillar, this is a big picture investment that we have to consider. And there is going to be, just look at the volatility in revenue, in profit, or even revenue. Well, there's going to be a decent amount of volatility. We got to be ready for that if we're considering investing in a company like this. Now, again, because I think it's important to look at the bigger picture trend, when we jump over and we look at net profit margins here, well, net profit margins, outside of a couple of down years back in 2017, 2018 area, numbers have done fairly well. There are low double-digit net profit margins, which isn't bad for a manufacturer like this. Okay, now before we jump in and look at the fair value for Caterpillar stock, I do think it's important to consider at least the shares outstanding. So this is the shares outstanding going back about the past decade on a quarterly basis. And we can see that much like what we saw with revenue or net income, because it's cyclical companies, it's not a clean, hey, we're buying back a certain amount of shares every year. It's not nearly that clean. In fact, there are periods of time where the shares being bought back might in fact increase. The shares might actually increase. But again, the broader trend is heading lower. So I think that's the bigger thing to keep in mind. Again, if we're interested in a company like Caterpillar, I think it's so important not to get caught up in the quarter by quarter numbers. Oh my God, they increased shares outstanding compared to last time. That has happened quite a few times over the past decade. But going out the next decade, it's likely to, broadly speaking, trend lower, at least if history is any indication. Okay, now let's jump in and look at free cash flow. So this is a chart of free cash flow from investorsgrow.com. So we can see in this chart here the three primary colors. The dark blue are historical numbers. We saw there was a big jump in the most recent number, 2023. The light green are analyst estimates. And we can see that analyst estimates march higher for 3 years, and then there's a slight pullback in the 2027 estimates. Again, this is right in line with the type of business that Caterpillar is. And then we extended it out a bit further to try to smooth out the growth a little bit. When we apply these numbers to our discounted cash flow calculator, well, we can see that we end up with a fair value of about $308 per share. Right now, the stock's trading at about $332 as of the shooting of this video, which puts it at about 8% overvalued, which clearly could be an issue from I wouldn't buy it today with it being a bit overvalued. But also, I wanted to come back real quick. Now that we have an idea what the fair value is, the question is this something we want to add to our bullpen? Well, for that, I actually want to jump over to a piece when I was reading through, I was doing the research for this video. I was reading through the financial statements and I came across a section where they were talking about Cat Financial. This is coming back to it that I was talking about before. Well, a lot of this just explains what Cat Financial does and how it interacts with the rest of their business. But there was one line that kind of threw me for a loop. And that was right here. It says Cat Financial also purchases short-term receivables from Caterpillar. Now, Cat Financial is a wholly owned subsidiary of Caterpillar. So all of the numbers from Cat Financial get pushed into Caterpillar. And I could easily justify why they would buy short-term receivables, why Cat Financial would buy short-term receivables. But my issue with it is it messes with free cash flow. So the way that this can mess with free cash flow is that if they're buying short-term receivables, if Caterpillar were to make let's say $1 million sale to a customer, but they don't actually receive the cash, if Cat Financial were to buy the receivable from Caterpillar, well, it would move the cash. It would basically move it from cash flow from financing into cash flow from operations. Cash flow from operations, in theory, could then be artificially inflated. Now, I went back and looked at historical cash flow from operations, and there's no indication that Cat Financial or Caterpillar in general is doing anything to mess with the numbers. I went through the past decade or so. In fact, I went back to 2012 was the first time I saw any mention of them buying receivables from Caterpillar. And going through the years, going through the operating cash flow or going through receivables, things like that, I didn't see any real big jump one way or another. So I am not saying this because I think that there is something nefarious happen. That's not at all the reason. But my issue with it is it presents the opportunity for something to go wrong. Now, it's not that big of a deal at the end of the day because, again, the stock is a bit overvalued right now anyways. So for me, I like to add a margin of safety. I'd probably want a 15% margin of safety on top of the 15% past the fair value based on the research that I've done. That would have been a reasonable number. But the fact that Cat Financial has the potential at some point, even 5-10 years from now, maybe you get a CEO in there that's not quite as on the level with what these current management teams appears to be. Well, if that's the case, this could become a really hairy business. Something very similar happened with GE. GE had GE Financial, and then in the Jack Welch days, GE Financial really started ramping up and becoming bigger and bigger and bigger. And then financial crisis happened and tanked the company because GE Financial was too big. I'd be afraid of Cat Financial going down that road. Again, it doesn't look like they're going to. Or let's put it this way, it doesn't look like they have been, but the potential is there, and that potential scares me. So for me, on a personal basis, I'm not going to add Caterpillar to my investment portfolio. I'm not even going to add this one to my bullpen because I think that there are too many good opportunities out there. So if you'd like to join our website or get access to any of our private investing live streams, I will leave a link in the description below as to how to do that. If you'd like, please let me know what you think of Caterpillar, what you've found based on your research. And if you're curious how to analyze companies, I did a video called 8 Steps to Analyze a Stock. I'll leave a link right there. Link in the description below. Thank you so much. I will see you in the next video.